Good afternoon, everybody. Welcome to Trader Merlin Show for your trading week wrap-up. It is a Friday edition, the end of January as well. I would cheers you guys, but I was in such a rush today to get up here. I forgot my glass downstairs. I could pause and run downstairs, but that probably would just be inappropriate at this point. So I'll have to give you a virtual cheers, and I'll celebrate as soon as I'm done. Wild week. Didn't really like the way that Friday panned out for me personally, but it is what it is, and we will just kind of truck through it and make the most of it. Some surprises, of course, as you saw the way the markets moved intraday today. Was really surprising. So here's the thumbnail for today. We are going to talk about, again, trading week wrap up, and really a lot of interesting things happened. And because I'm so scatterbrained today, I don't even have all my notes with me. So we're going to just play it by ear as we go. I'll start things off with our market overview, just really kind of what happened this month. I know that there's this as goes January, so goes the rest of the year mantra. And I think that that's going to be, at least for me anyway, the starting point for today because, we didn't have the Santa Claus rally. It was rather disappointing. However, all of a sudden, we had a pretty darn good January. So let's start with our January numbers and then we'll work backwards from there. I'll start with the worst and go to first, if I can. Our 10-year bond yield. Now, just to kind of keep it safe, I will show you the monthly results, which is negative 0.66 on the yield, right? So I wouldn't do that to you, Lisa. It would just be like causing you guys to sit here and wait. It was just, oh man, just so hectic on my end. Anyway, here's that 10-year, and I'll put a vertical line right where January started so we can kind of see what the month of January did. Granted, it was down. At one point was looking really good as we got into mid-January and then really started to fall apart and really ending on the weakest possible note, right? This does look like a head and shoulders pattern, as I pointed out. Longer term, I agree with Bill Addis, who was our guest on yesterday's show. I do believe that we will have a longer term uptrend in that 10-year yield, right? So I don't anticipate this being the end of the uptrend in that 10-year, which we looked at quite a bit yesterday. Just technically, that pattern does say that we are looking for some weakness in the 10-year yield, which I'm sure the markets would rejoice over that. However, given the uncertainty and a lot of the comments that were made, the tariff stuff, which is supposed to go into effect tomorrow, which is kind of crazy, it would lead me to believe that this is going to be going higher. So while we do have an while we do have a head and shoulders pattern that is showing weakness, I still am actually bullish on the yield for the 10-year. I hate to say it, but that was your worst performer, down 0.66%. Dollar index right on the heels of that. I mean, pretty much unchanged when you look at what it's done for the month of January. Here's your vertical line to show where January started, and we're pretty much right where we're at, like right at it. Not a lot to say here other than the uptrend, in my opinion, is still intact. Still intact. So I think this also puts further pressure on that interest rate prices. As interest rates start to rise, the dollar should move up even more. And given all that's going on right now, it does feel like that dollar is getting stronger. So while we didn't have much of a move in the month of January, I still think we have some strength going for the rest of the year. Hey, Chris, good to see you. Now we jump into the good stuff. These indexes were pretty darn good. Now, this is coming off the heels of a pretty dismal Santa Claus rally, right? Didn't really do much. So a lot of people believe that Santa Claus rally stretches into January, and then January will be weak, and that kind of is a signal for the whole year. Well, they're two separate events, obviously. And the January effect, the January barometer, as Yale Hirsch of the Trader's Almanac would call it, looked great. We'll get to the S&P here in just a second, but the NASDAQ has a pretty good picture as well. Here is your NASDAQ 100. It doesn't look great because we kind of were trending down for a little bit here, but if you notice where we opened up on January, right, we're right at that 21,160, and here at 21,558. So all in all, it was up for the month, 1.58% for the NASDAQ. From a trend perspective, though, this one doesn't tell me a lot. It felt like we were doing great up until January. And then all of a sudden, we look like we had this small correction coming, and now that's broken, and I just feel like there's just a lot of chop going on here with the NASDAQ 100, so not a lot of real clear direction there with the NASDAQ, unfortunately. Now, our next one on here is the Russell 2000. Oliver, yes, it is a Whiskey Friday, but I forgot my glass downstairs. That's I was in such a rush to get up here and get all the... I forgot to get my list of numbers done for the day, so I'm a little bit out of sorts. Just chicken with my head cut off today. I'm doing just too much research, and there's... I don't know if you guys have felt this, but it feels like there's so much happening on a daily basis with these equity markets. You look at what the Trump effect on these equity markets is just chaotic. From, we've got till next week, next Thursday, where federal employees can now kind of resign if they want to and save themselves a little bit of potential misery. That's a big deal. You've got the immigration and deportation thing, which is causing kind of chaos. And then, of course, Oliver says the tariff announcement. We talked about that yesterday. He's doubling down again with that today, saying, yep, it's going to go through. Of course, I think Reuters said it's not going to happen, and then Trump doubled down and said, no, it is going to happen. Get your news right. My guess is by Monday, there will be no tariffs. It won't happen on this weekend. It's posturing to see what these other governments do. But the markets don't like this kind of uncertainty, and I think we saw that at the end of the day today. So let me get through the top 10 or top 8 for January, and then we'll break down what happened today, because, it was an off-the-cliff kind of moment. I actually sold some puts on IBIT today, and it's like, I swear that the second I hit the button on the IBIT puts, it just went straight down. I'm like, were you really? Were you just waiting for me to sell those puts? But I'll get to that here in just a sec. So your Russell 2000 was up 1.95%. That makes it what I think our 4th place finisher here. And there's the chart of it. Really nothing fantastic. This is even uglier than the NASDAQ. We had an uptrend, had a downtrend, and now it's like, well, which way are we going to go, George? I don't know. I for one, will really pay much closer attention to what happens at the Russell for the next few months, because there is that belief, I've said it many times, that the canary in the coal mine is the Russell. If it starts to slow down, if I start to see copper prices start to sell off and transportations get weaker, then to me that's going to bring the whole market down. So we're kind of having this domino effect that I'm just kind of waiting on. All right, next on the list, that was the Russell 2000, the S&P 500. So there's your January effect. The January barometer, again, from Trader's Almanac and Jeffrey and Yale Hirsch, who kind of came up with the idea just by looking at the stats. This paints a good picture for the rest of the year. So for all of us who were under and showed negative on the year, probably not liking that. So we were a small group here of people who were negative for the year. Let's see, we've got, this was just a Michael. I don't know who the Michael was, but there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 21, 22 people out of 60 plus. So let's say like about a third were negative on the S&P this year. Well, we may be out of luck, because that January effect is looking pretty positive, 2.15% to the plus side. Statistically, this does have a higher probability of the year closing higher now. Of course, we're off to a good start. So all in all, a pretty good, I agree with John here, a pretty amazing start to January. I don't know if amazing, but it was definitely a good start, right? Amazing to me is when I start to see double-digit gains in a month. That's like, wow, this is crazy. But Big Ip says, you got trumped. I did, but it's all right. I'll be doing my trumping during the year. We'll have our winning moments. We'll have our losing moments along the way. The key is not the one trade. It's the result of all of them. So just for an FYI for everyone, what I decided to do is I created another account. I always like doing little tests and different experiments. And so this year, I'm going to try just this one account. I'm going to call it my IBIT account. And so I'll track it and let you guys know what's going on there. But the IBIT account, I'm only going to do the wheel strategy on IBIT, full margin and everything, and we'll see what the rate of return is for the end of the year. And I'll try to keep those on weeklies. I was going to do monthly, but I just feel like I can get a much better rate of return doing weeklies. We're off to a fairly negative start, which is okay. We'll get there eventually, especially with all the stuff that's going on with MicroStrategy and these new bond offerings. I think Bitcoin will do fine. But I earmarked one account that is specifically will only have IBIT in it and will only be using the wheel strategy. Selling puts, no real rhyme or reason yet as far as where I'm doing the strike prices. In my opinion, I want to own it, and I'll sell calls against it at a much higher price and even increase that rate of return. So I'll let you know how that one progresses. But that's a new addition to this year, as I condensed one of the gamble accounts down, and I condensed one of the option accounts down and made some new stuff. Ben, those are your forecasts? All right, I'll put you on there, Ben. I'm going to have to scroll through because I won't do it. I won't do it right now, but I'll put you on at the end of the show. So perfect, great. All right, so this is your S&P 500. From a technical perspective, we didn't look at the S&P. This one looks a lot better, right? It's just been going up and up and up. Other than the tail end of December and the first couple weeks of January, S&P's been looking great, and we have been going sideways for 5 straight days now with no real clear sense of direction. But we did today smack our head against all-time highs yet again. I mean, the markets early on today were great. Fortunately for me, on my SMCI, I managed to sell a bunch of covered calls when you were trading at 30.50. So that was wonderful because all of a sudden SMCI just fell apart as the whole market did. So managed to lock in some really nice premium there, and we'll see what happens over next week. Those are weekly expiring this Friday or next Friday. So S&P certainly looking stronger in my opinion than the NASDAQ and the Russell. What I didn't include in here is the Dow. The Dow is looking absolutely fantastic, but also notice that the Dow was right at all-time highs. Right, we were just smack on it today at 45,500, 45,000 even. So that's the strongest of all three. So Dow's the strongest, S&P followed by the NASDAQ, and then by the Russell from a strength perspective in our markets, which means I've got a couple more things to talk about in here. Crude oil beating out the S&P 500 for the month of January. Crude oil 2.9%. However, at one point, crude oil was looking way better. I mean, crude oil was having a heck of a month early on. I'll go from where we opened up to where we closed it, to our peak. At one point, crude oil was up 12.4%. Huge. And now all of a sudden coming right back down. It hasn't really broke through this with any conviction. Oh, I'm sorry. Got the wrong picture up there. My bad. So there's your crude oil chart. Sorry for the title slide there. We are back down into that area of demand in that yellow box, but it's tough. This is where it becomes very subjective. How many of you feel like we've broken that one? How many feel we've broken that yellow box and it's done? Or do you kind of fudge it a little bit and say, well, we haven't really had a convincing close below it? This is where it's so difficult with trading because it's more of an art, as Larry said on our Wednesday show. It's tricky. It just feels like that crude oil is sitting here, although I think the longer term, as we talked about over the past couple of days, has been lower, right? If it's drill, let's go. And Sava says, oil stocks had bad earnings today. Well, we can bring that up for you right here. Just look at what happened with some of those earnings stocks. So Chevron, they missed their earnings. You had ExxonMobil. They beat their earnings, actually. So I thought Phillips 66 was on here. Phillips 66, so they beat. So it really wasn't that bad of earnings. No, I don't think it was too bad. I mean, Chevron missed, ExxonMobil missed. It was I just think general weakness in oil overall, what we experienced out there today. So crude oil, man, I don't know. My gut tells me it's going lower at this point. Really, it's just like all of us like it closed below it. Yeah, which we have we gotten the close below it, and we could argue this red one right here. Actually, these last two have closed below that yellow box. So technically, we're below it. Now, when you have a situation like this, typically what happens is if it closes below it, what you get is a big momentum shift, meaning all of a sudden there's people who are looking at this level. Now that it's closed below it, they'll close their trades, whether it's automated through algorithms or humans. That would normally be a trigger for selling, but we haven't gotten it. It's just really kind of stuck there, which is interesting when you look from a price psychology perspective. All right, moving on up our list over here. Boom, gold. I mentioned I thought we were going to see gold get back to all-time highs, and we did. We saw it rip through yesterday off the tariff news. Today giving a little bit of a reprieve, if you will, down 0.36% on the day. Before the month, 7.25% gain. Pretty nice. And, at this point, I do think you're going to continue to see it move to the upside. There's just too much global uncertainty right now, too much unknown from what could happen from our new administration here, and that creates kind of that fear factor, which drives people to gold. And of course, on that vein, well, number one for the month of January was Bitcoin up 8.86%. Here's your BTC chart, which started off nice, and then today, this was a rough one. We were down 3.44%. At one point today on the spot price, we were up at 105 and change. The futures actually made up to 106.9. Before falling significantly. Although, you look at it, it's still really holding price. So this is still a good spot to be. I follow a couple other people out there, and they're really convinced that the 101 level is the spot where this thing's going to stop and bounce. And based off of a demand zone, you could kind of make that argument here. This kind of 101 spot, which is from back just a couple of days ago, from Tuesday. So that's your monthly rundown, your top 8. All in all, pretty good. When you look across the spectrum of all the assets, or at least the major assets that we look at here on the show, to have only one of them negative, it's pretty good. That's a great month. Good way to start things off. 3 days in a row down, the zone is broken. That's what Les is saying. Yeah, okay. 3 days in a row down, below it. Yeah. I mean, in my gut, I'm thinking it's broken too, Les. But usually, when I see something break like this, there's like a big candle, an explosive candle as it rips out of a demand or supply zone, right? And once it breaks through, like when we saw gold to the upside, when we had, let's go look at the gold chart here to the upside. You have these supply zones it kept hitting its head on, and came right back up to it. And when it broke through, this triggered a lot of volume. We could probably add volume on here, and actually, really wasn't that elevated. I anticipate this being much higher elevation with the volume as people are using that 2,800 level as overhead supply. All of a sudden it breaks through. It's like, oh, I'm buying. I'm jumping on this one. And you get the big momentum. That's what I thought would happen with crude oil, but we just didn't get it. GS says, Merlin, when would you consider to start hedging against your long-term positions? I think you got to start doing it now, personally. I just think, I don't know. I don't think that there's going to be a huge correction like the markets are just going to sell off and implode. But we could see, if you take a sine wave, let me see if I can draw this out for you and make a visual representation of this, because I think that might help a little bit, because my artwork has been so atrocious. We'll see if I can draw this a little bit better using something like PowerPoint. So if we look at this, and hopefully you guys have a blank screen. All right, so there's your blank screen. And let's say that the normal curve, the ebb and flow of prices looks like this, right? So I'm going to draw some lines on here. Bear with me, as you guys will see in a second. Okay, there's your normal. And in my opinion, this is what markets do over time. We get our nice ebbs and flows. We get the moves up and down. Okay, great. Now, the difference here is this. Now, let's overlap this perfectly with what I believe the markets are going to look like under Trump's administration. And I'm going to stretch this out that way. That's just for one start. And I want to keep that anchor point there. And then what I'll do is I will edit some of these points, and I'll change the colors on them. So I think you're going to see stuff like this year. And I'm going to label this. Oops, let me get that out there. Let's color code this one a different line color. We'll make it blue. Did that do anything to it? It should have. Let's make it it's blue. Okay. Actually, I'll make it red. So the red is what I think is going to happen now. So we got our normal curve, and then we have, I'll just say the new curve. So again, this isn't just Trump. This is not, I'm not trying to point a finger at Trump and say, well, you're causing this. Certainly a big factor to it, but it's all of the other uncertain political changes that we have. So in my opinion, this is what I think the year is going to look like. Really, it's going to be, we've got our normal over time where things go up, series of lower or higher highs, higher lows, and then you have this new one, which is just wild swings. And as Tofi says, isn't this better for us as traders? Absolutely. 100%, Tofi. This is one of those ones where, as an active trader, someone who has a skill set and can definitely trade. It's just like rub your hands, right? Just like yes, love it. It's good, but there's also going to be moments where sometimes the volatility can be a little bit too high. Today's action, while it wasn't a neck-breaking move, let's look at this on a 5-minute time frame just to show how quickly this whipsawed. I mean, this was an about face. If you look at it from this morning, things were looking good, right? We had our inflation data, which wasn't atrocious. It was in line with expectations. This is the 5-minute over the past few days. Things look good, and all of a sudden, womp, womp. I mean, really quick, we saw that big abrupt move. Why? The economy didn't change. The world didn't change. This was simply, no, we are putting tariffs on. I don't care what people say. We're putting tariffs on China, putting tariffs on Mexico, and on Canada. And that, that uncertainty, those kind of whipsaws are going to be a staple for this market going forward. So yes, it is better for us traders to have more volatility, but it's also going to be a little bit more stress. Let's see, what did Oliver say? Until the tariff announcement. Yeah, it was great until that tariff announcement. Well, and remember, we talked about this yesterday. We knew the tariff announcement was going to happen. He said it yesterday. So I really was kind of shocked to see that the fact that when he doubled down on it and said, no, we are, then that's when the markets really really tanked. You know, my gut, just based off what happened between 2016 and 2020, is it's not going to happen. It's posturing. You know, we did this time and time again with China. I remember it feels like every Friday, China really doing bad things. You know, nobody knows China like I do, and they're doing really bad things. We're going to do a 30% tariff on all Chinese goods. And that was like Thursday, Friday, right? And then Monday come around, you know, China has been really good, really kind. They're working really hard to work with us. What happened to the tariffs? So we'll have to see. This is just the new normal, as John O'Donnell would say. This is how things have changed, right? And is it gonna appease anytime soon? No. So we just have to deal with it and try to capitalize on it as much as possible. Old values, new values, yeah. Do we have an actual list of what's being tariffed? So, Saba, from what I heard, it's everything. Basically, if it's a good coming in from Canada, 25% tariff. If it's a good coming in from Mexico, 25%. You coming from China, 10%. Now, I don't know if that's necessarily true. That's just something I heard from a couple of different places, but that would be pretty intense to say across the board, right? You need your ad, and it's like, no, I'm surprised that I haven't gotten enough, a bunch of hate from you, because a lot of people just hate Trump impersonations like I'm mocking him. Look, he makes enough fun of himself that I can make fun of him. Oh, anyway, no, I feel like I should look at my followers, and I wonder if I'm losing followers because I do Trump impersonations. Look, I welcome him, right? I hope he does the best job for the United States. I hope that I've got him as a president for 4 years. So I'm just optimistic. Let's hope for the best. If the worst happens, then I will have to position myself that way. But let's be optimistic about it, and I'm going to make fun of him along the way because, you know, you listen to his track record, and what I find most humorous is he always says, you know, when it comes to lighting a studio, I know more. No, few people know more than I know about lighting a studio. You know, you want to talk about cutter blades and knives? I know more about cutter blades. The guy knows everything. It's crazy. All right, I'm done. No more Trump impersonations. Thank you, Big Ed. I appreciate that. You know, we are at its heart. Everyone who's here, I'm sure we have a few people are outside the country, but we're all Americans at this point. And again, whether you love him or hate him, you gotta cheer him on. You gotta hope that he does the best for our country. Period. Glad I upgraded my GPU and CPU in November. Sava, good point. You know, and this is really interesting. Is do we see the cost of those goods and services jump? And you know, let's look at that number that came out today for the our number today for the core PCE price index, right? This is, of course, the one that the Fed is looking at the most. And here is the core PCE price index. Where is it? There it is. It's in line with expectations. So this really was not bad. I think that there might have been overreaction to it today. I thought that this was actually okay. LTH. I need to work on my Harris interpretation. Let me see if I can get that one done. I never really had that one done. But, you know, we came in at 0.2. I mean, the next 2 months, in my opinion, are going to be absolutely critical. Because if we do slap these tariffs on, if they do go through, and if we stick to it, then we're going to see increases across the board. Now, it's not like all of a sudden your hamburger's going to cost, you know, go from $8 to $16, but there will be increase of certain commodity inputs. As we know, things we get from Canada, we import a lot of oil, a lot of fertilizers come from Canada, a lot of uranium comes from Canada. I mean, there's a lot of things that come from Canada. You look at a lot of the manufacturing that happened in Mexico, a lot of our cars are made in Mexico. So do we start to see, you know, a 9% increase in the cost of vehicles manufactured in Mexico? I don't know. And we'll really get a clearer sense of that in a few months with this core PCE price index once we've had a couple of months for those tariffs to really take a hold. But I think the knee-jerk reaction we saw today was one of fear and uncertainty. And it wasn't just the S&P. There's your 5-minute of the S&P. Here's your NASDAQ. Here's your Russell. You know, they were all pretty bad. And looking at the our Magnificent Seven, which we've been kind of focusing on lately because of the earnings, NVIDIA took a brunt of that today as well. You know, TSM, does that get tariffed? That's not China. I mean, where do we draw the line there? Does TSM get to escape that because it's Taiwan and it's not actually China? Who knows? Apple, you know, slightly down on the day. but all of them reacting heavily to that initial surge to the south side there for our equity indexes. So wild day. It was. It started off a huge positive update for me and ended up actually not being a really good day at the end of the day, number-wise. A lot of American car companies are manufactured in Mexico. Yeah, that's right, Saba. A lot are. I mean, it makes sense. The labor is a lot cheaper there. And that's part of the reason that Trump's doing what he's doing, is saying, well, look, if you're going to undercut our labor and take jobs away from Americans, then we're just going to raise the price of those goods so that now some of that manufacturing may be done in America. It makes sense to do those tariffs. It's just ultimately we are going to pay the cost. So yes, it's going to increase jobs in the long run, not within the next 3 months or 6 months. This is something that in the long run should create a lot more domestic jobs. But keep in mind, with that as those jobs may transition from Canada or Mexico or China or wherever to United States, then we're going to be paying higher prices for that, and that may be reflected in the goods and services we have. Hope tentative agreement gets voted in at work. Might need all that extra. Oh, yeah. You got a tentative agreement for the airlines? Merlin, did you hear Doge is trying to get rid of the price of the pennies because, yes. Yeah, I saw that, Oliver. And come on, I've made fun of this for years. I think it's one of the dumbest things we have is the U.S. penny. And this is another argument for central bank digital currencies, folks. Make it digital. We can still have a 1 cent increment, but having a penny, it costs over 3 cents to manufacture a penny. That's bad business. If I'm trying to sell you an item for $10, but it costs me $30+ to make it, that's a losing business, right? It's a kind of no-brainer. So, yeah, I'm all for it. Get rid of the pennies. You know what? This is kind of, you guys may find this entertaining. If we've got some handymen or handy women in the audience, if you go to, let's say, a Home Depot, and you buy washers, like a simple washer to put the screw through, how much does a washer cost? I might actually have it here. Do I have them here? How much does a washer cost, everybody? A washer at Home Depot is like 5 cents. Well, I take pennies and I have a drill press. I drill through pennies and I use pennies as washers for things that I'm doing because it just doesn't make any sense. Yeah, the nickels are closer. What is like 6 or 7 cents to manufacture a nickel? Something like that. I think it's close. But look, I don't know how long I've been saying. Actually, I do know how long I've been saying it. I've been saying this since I was doing Power Trading Radio with Gary Christmas. Some of you might remember this show. Gary Christmas came on back in 2017. We were talking a lot about cryptocurrencies, and in 2019, I believe, 18 or 19, Gary came in and said, we're going to have a central bank digital currency by the end of the year. And I think that was 2019. I said, no. They're going to test this out. It's going to happen. But it will happen over time. And what Trump is saying, no way will we have a central bank digital currency on my watch. And that may be true. But this is an inevitability. This is like saying there's no way on my watch we're going to have driverless cars. Well, okay, when your administration is done, the next one will usher it in, and we'll get there. Maybe Merlin would let us use this drill. Sure, absolutely. I would absolutely do it. I know, Sava, that's illegal. Shh. Maybe I need to. I'm going to pull this show down just so I don't get in trouble with the authorities for drilling through pennies. They'd be looking around my house trying to find all those spots I've used them as washers. Oh, man. Anyway, yeah, get rid of the pennies. But, look, I love what Doge is doing. Not the crypto, but the Department of Government Efficiency. I mean, there needed to be some drastic changes. We talked about this well before we started getting into the election, as we need to start cutting costs. When you look at the numbers, the deficits, we've got to start cutting costs, period. If any one of you were in that situation and I was helping you out as a friend, I'd be like, look, you got to start cutting some costs, man, or you're going to go bankrupt here in no time. So, I like it, but my gut question to myself, and I think you guys should all be asking this too, is what damage do these extensive cuts have on the economy? Do we see a surge in unemployment? Do we see people who actually were doing good work for the government walk and do something else? There is a risk here that we may have cut too much. And I'm going to record it in my Monday morning must-knows, but one of the things we got to pay attention to is that, what is it called? Deferred retirement, whatever Trump is calling it, where by next Thursday, you have to respond to an email that went to every government employee and say yes or no. And if you say yes, you're getting paid until September 30th, and you don't have to do a damn thing until then. And after September 30th, no bennies, no money, no job. I don't know what the impact of that's going to be. I have no clue, but we will see. I'm excited. Again, it's opportunity for you and me. Maybe the driverless planes too at some point. Maybe, Big Ed. You know, Elon Musk, if you guys listen to the Tesla conference, which, by the way, started off bad, right? Tesla's earnings were not great. And then you look out here, and we'll do a 5-minute, right? As their earnings came out, that was Tuesday. That was Wednesday afternoon. So you can see they started off with a heavy drop. They fell real quick. I mean, on that earnings announcement, Tesla fell 6.23% as they reported their earnings. And then they got in their conference call, and all of a sudden, you know, the numbers and the data, a lot of stuff that we've talked about on this program was reiterated by Musk. And it looked like, you know, things were looking really good for Tesla. And, you know, again, I think that his partnership, his buddy, his, you know, Lone Ranger and Tonto with the president is he's going to find ways to really change the legislation, the rules in his favor. He said that by the middle of this year, they'll have full driverless cars available throughout Texas. And he said by the end of next year throughout the United States. If they're first to market there, Tesla's $1,000 stock, no problem. Flying. Let's see. Elon Musk tweeted that our economy is driven by government spending. I would agree. I'd agree. Lee says, my question is, are there pensions attached to those jobs? I would take the package in a heartbeat if that was the case. Good question. I'm sure that you would get what existing benefits you had at that moment, right? Yeah, I don't know all the little details. I had a conversation with a friend today about this. It's like it really, I put myself in that person's shoes. If I knew that I could quit Thursday and be done and have really 8 months of full pay to do whatever I want, man, that'd be really interesting thought for me. Depending on what my skill set was. And remember, a lot of these people, I know we have some people here who are government employees. Some of you probably looking around at your work environment going, there's going to be people who get fired in my department. Now, would you rather just get fired and get maybe a 2-week severance package? Or would you quit and get 8 months? Knowing that wave of unemployment might be coming, I'm really curious to see how many people say yes by next weekend. Could be very interesting. I don't know. I was asking myself that question on a walk today. I was like, would I quit? I probably would. Depends on my role, how much my income was. I'd probably quit. Let's see. What else I got here? I've sparked some good conversations here. Jay Patel, what is the purpose of the U.S.-Mexico trade agreement? I believe it's free trade agreement between the United States, Mexico, and Canada. Yeah, I don't know either, Jay. I don't. I never really got into the whole trade agreements. You know, at some point, I think we talked about this yesterday, you know, does Mexico and the United States and Canada all become one continent, one country, as the North American continent? Well, we have such different work ethics from Mexico to the U.S. to Canada and different cultures. Like, I don't know if that would actually work. But in my opinion, I don't know. I think things were working. Don't rock the boat, but whatever. What do I know? I'm just a consumer. So I don't know all the details of those agreements for sure. Let's see. And cars aren't even the best part of Tesla. Exactly. I don't think that cars are the best part of Tesla, John. I think it's the AI, and I think it's the robotics. That's, to me, that's the big deal. Add a pension and health care for life to that. Well, health care for life, that's not going to happen. So what I read was that you got your salary and all benefits up until September 30th. And then chop it chop. So yeah, for some people who really want the health benefits, and that would be a big deciding factor. But look, if you know your job is probably going to be replaced or cut, may as well take it and do it. First question, when you sell puts, what percentage return are you looking for on a weekly basis? So it depends on what account technician. So on the IBIT, I'm looking between 1 and 3% per week. And that's going to be, so my goal for the end of this year is to have a 52% minimum rate of return for the IBIT account. For the larger accounts, I'm still doing monthlies in there, and I'm looking to get 1 to 3% per month. So I'm taking much more conservative trades because it's larger amounts of capital and getting a lesser rate of return. So in that case, if you're saying 1% per month, it's looking at getting 0.25% per week, but I'm only doing monthly options in the big account. I have switched over to a lot of weeklies. So I'm taking a little bit more chance and taking on more risk in some of these weeklies. But yeah, in my really wild, crazy account that I can trade anything I want, I'm really trying to get 4 to 5% a week, which we'll see. Obviously I have my good weeks. I'm going to have my bad weeks along the way, but the target is those numbers. We shall see. Good day to you as well, Steve. All right. I had so many things to discuss today, and everything seems to be not working for me. I brought my USB drive up here with all my graphics for today. That didn't work. My whiskey's sitting downstairs. It's just a rough one. Let's talk about a couple other things. So it took us forever to get this ETF for Bitcoin. And I've been mentioning that I really think you're going to start to see more pop up. So here is the IBIT ETF. Bear with me as I try to get this back in a scale here. Here's your IBIT ETF, which basically the top of this red body is where I sold my puts today. It was hilarious, and it just fell apart right away. But either way, it's for next Friday. This is all Bitcoin ETF. Now, there is a new one put out by Bitwise. It's a new ETF. They got approval for it today. And this is what's shocking is how quickly they got approval. It took years to get Bitcoin ETF approval. And now all of a sudden Bitwise says, hey, we'd like to do a combo of Bitcoin and Ethereum. I think it's going to be 85% Bitcoin, 15% Ethereum. So kind of based off like overall crypto market cap. This is another good set. To me, this is another addition to the markets that's going to be good. The next one that I want to see, and then I'll really be a fan, and I hope it comes from BlackRock, is a 10 crypto portfolio, which are the top 10 non-meme coins. So Doja's out, Shiba Inu's out. No meme coins are allowed, and they have to be legit projects, but the top 10 actual projects in an ETF. That's one that I think when we get to that point, it certainly should be something that are in people's long-term portfolios. I think that is a big time addition to help spread around that crypto risk and get you exposure to some of these firms. Like right now, there's a lot of talk. You had an ex-central banker comment on how great Solana is. You got a central banker commenting on how great Solana is as a payment rail. It's coming. We're going to see more and more of it. So pretty exciting. You need a strategic reserve of whiskey upstairs. I will start a strategic. I usually keep a bottle up here, but I cleaned the office and now it's just a total mess. If I turn the camera on, you guys be I would be embarrassed. I wouldn't let you go. I wouldn't let you see it. Does this have options? So IBIT has options, but that's why I'm using IBIT in this one account. But the new one will not have options for a while, right? They have to sit around for a while before they start to get options on them. Let's see. It won't take a drink. Make some kind of poll. Go get your drink. No. I got like 5 minutes left, guys. I got 5 minutes left. I'll just have to take a double shot next Friday to really get going. Johnny Chingas. Do you recommend using a prop firm for trading Forex? If so, which ones are trustworthy? Johnny, I'll be honest, I don't. I do not recommend prop firms. And again, I'm a skeptic. Please, for those of you who are using prop firms, if it works for you, great. Here's my attitude, Johnny. A prop firm is a firm that gives you money to trade, right? At its simplest form, that's what it is. You go to these prop firms and they will, you put in $5,000 and say, okay, now you can trade $50 or $100 or $200,000, whatever their limits are. What I've learned from so many people who have gone through them is this. Let's say I go to XYZ prop firm and they say, okay, you bring in $5,000, you can now trade 100. So I get 20x. I have to pay a little bit for the training because I have to follow their models. Typically, there's a little payment there. So you go there and you actually have to pay to take their class, and then they put you through like a gauntlet of training. And you have to meet these certain thresholds. If you don't follow these rules, lock, stock, 100%, they will automatically boot you. So they don't care if you pay for their class and go through the combine, they call it, and get kicked out because they keep the money for your education. So already you're at a disadvantage. Number two, once you go and you start trading with their money, if you can prove that you're making money, then they give you more. If you lose any bit, you're out, done, and you're responsible for all the losses. My opinion is, why would you want to trade someone else's money? And I understand it's because I only have a little bit of money and I want to have a lot more access to capital. And I guess I've never wanted to use one because if I can't make it with my own money, then I'm not going to use it. if I was to say, here's the ideal plan for somebody is, yeah, I'd be happy to have a conversation on that one. I mean, I know how the industry works, but my belief is you should trade with your own money because it's yours. You're going to care for it better than anybody else. You trade with that money very slowly until you get your plan, your strategy, and your rules down. Now, a prop firm may help you because they give you the rules, the plan, the strategy, the tactics, and they'll enforce those, which is great because many people fall off the rails of discipline and money management and they blow their accounts early on. But I would rather you come up with your rules, your plan, and start making money and prove that you can trade that way. And then you start using leverage. That doesn't necessarily need to be from a prop firm. It can be just accounts that give you leverage, like an options, like a futures, even crypto firms. And in international forex, you can get like 500 to 1 leverage, which I think is insane. And then I would simply compound my accounts and compound and compound and compound. A lot of people, I think, rush too early on to make a lot of money, and they go into a prop firm hoping that they can make a lot of money with borrowed money, and you don't have the skill set yet. So email me, John. Email me. I'm happy to discuss it. For me, it's a hard pass, but of course I'm a totally different animal. I mean, I've already spent 28 years doing this, and I would have no need for a prop firm personally. The other part of it is just for the same reason I don't want to manage people's money. I met with a friend of mine last weekend, and he would like me to come work for a big financial firm, get my licenses and hang my hat on that and invest for a whole bunch of people. And I'm like, you know what? I don't want to be responsible for other people's money. I only want to be responsible for my own. And technically in a prop firm, you're somewhat responsible for other people's money because when you lose with leverage, that person that gave you that borrowed money, in this case the prop firm or whoever is backing you, they don't lose. So you lose money twice as fast or 3 times as fast, depending how much leverage you use. So I'm not a fan. I think that you start off slow and you can just go and go and go. Most people, I think, are going to wash out from a prop firm, but happy to, some of us are broke. And I think that's the big challenge, John, is some people have a lot of, a lack of capital. Right, so there's that rush to go to a prop firm to get that capital. But remember that prop firm's there for a reason. They're going to be making money off it. And I would rather keep 100% of my gains versus 80%. Or in some cases 60 or 40, depending on how your prop firm slices that pie. So I keep 100% of my gains, and I'm responsible for 100% of my losses. That's it. And to me, I feel better about that. So if I have a losing day, it's my money, as opposed to if I have a losing day, I've lost some of my money and the firm's money, which now I have to come up with. It's kind of structured, very attractive to get started. All right. Well, I don't know if it's necessarily uneducated. I think there's a lot of, it's 90-10. That's not bad. That's really not bad. But I think you would probably agree that the likelihood of someone getting booted is pretty high if they don't follow those rules, specifically to the dot. So I guess to the original question, I don't know. So what was it, Johnny? Johnny, I don't know. I've had a few people message me, and I know some people that actually use prop firms, and it works for them, right? Jerry Baldwin's a good example. He uses a prop firm, and I don't. We had a poll, an impromptu poll here as an audience, and I asked if people would want to have prop firms come on and talk about prop firms, and it was kind of a resounding no. So I just said that's fine with me. I could show you my inbox, and I have so many messages from people wanting to come on this program and talk about prop firms. They want to talk about investment firms, advisory firms. It's like, but I don't want to do that unless I really know these people, and I haven't taken the time to get to know them. Is it possible Grok came up with a severance pay for federal employees? No, I think this is Elon Musk. If you look at it, to me, it's like right out of the playbook of what he did at Twitter. And he got rid of 80% of those employees. 80% of the employees. I mean, could you imagine the money efficiency if we cut 80% of government employees? 80%? Like, wow. The problem is I think we'd have some pretty significant issues. Unemployment would be a big one. Unemployment would be a real problem for our markets, and that would be a shock factor to go through that much. All right. Holy cow, we're almost done. Jerry Baldwin currently is. I think Lisa, when he was on the program the other day, he was talking about that he does a combine for a prop firm. I don't know if that's his exclusive thing or he just kind of does it as a competition, but he talked about that. Johnson provides good practice without having to lose a substantial amount of capital. A great way to work on psychology. Must have skin in the game. Yeah, totally. It's funny, John. I was at a conference in Charlotte a couple weeks back in North Carolina, and there were 5 of us on stage, and somebody asked, "What are your thoughts on simulated paper trading?" And I immediately, literally bit my tongue. I was like, don't say a word, because I know it's not what the organizers wanted to hear. People want to hear, yes, you should use a simulator because it'll help you, and it's so much better. No, hogwash. When you guys learn to ride a bicycle, your parents probably put training wheels on your bicycle. Well, my training wheels were 2 feet. I had a left foot, I had a right foot, and those are my training wheels. I just basically got on the bike. I never had training wheels. I wanted to ride that bike and work on my balance as is and not rely on those wheels. It gave me a false sense of hope with the training wheels. Training wheels are probably even too much support compared to what a simulated trading atmosphere does. It's not real. So when it came to my turn to speak at the panel, I just said, guys, I would not recommend you use a simulator. If you use a simulator, it should be, in my opinion, for one thing, and that is to get proficient on the platform, order entry, all the features and functionality, understand how to use that platform. But to trust that when you hit that buy button, oh, that's the price you got? No way. When I first was sold on this trading, day trading idea, one of the guys that I was sitting next to, I went down to a trading academy center it was at the time it was called Block Trading. So there was Online Trading Academy and then there was Block Trading next door. They took me over to the block trading side and they sat me down with a guy named David. I'll never forget. And David said, "Oh yeah, you're thinking about taking the class? Yeah, it's making money so easy." I'm like, okay, what I wanted to hear. And David put an order to buy a stock. I'll say Microsoft, whatever. And he put it in and he bought 1,000 shares and he goes, "Watch this." And he flipped and sold 1,000 shares and made like $5,000 in seconds. And I was like, oh, what? How did you do that? He's like, "Watch." Boom, did it again. Now all of a sudden he's up $10,000. It's been like 2 minutes. I'm going, sign me up. I want to learn this. What he was doing is he was just putting in arbitrary prices in a simulator because there's nothing that would prevent that from executing. So let's say the best price you can buy right now is $100. He'd go in there and say, "I'll buy it at 95. Well, no, you can't. There's no one selling it at 95. They're selling it at 100. So he would put in, buy it at 95, and then he'd go and sell it at 105, and I made $10 per share. Made 10 grand right there, like that. So yeah, I think simulator gives you false hope. It should just be to learn the ins and outs of the platform to get you comfortable, but never trust the numbers or all that because, you have no emotional attachment to a simulator. You can simply, it's like crashing a car in Gran Turismo with PlayStation or Xbox, right? You just hit the reset button, your car is perfectly brand new. You crash doing 200 miles an hour in real life, there's not much left, right? Same thing in trading. So yeah, I don't believe you should use simulators, but I think it does help you. And I think John's got a good point. For people who are just starting out, it may point you in the right direction, but at a certain point, you got to walk away and say, I'm going to keep 100% and take 100% accountability for my trades. Then you get the cinder block and yes, I did. I was the old school man. I did have the cinder block. I got the what are those, the clothespins, and I put baseball cards on my spokes so it sounded like a motor. Oh yeah, I did it all. Buy, sell one share, that's better, Tofi. I'd agree. And the thing that Tofi just brought up is pretty important. It says buy one share. It doesn't cost you anything. There's no transaction cost. You could buy something like, I don't know, Rivian. $13 stock. You buy one share. What's the most you can lose? $13. But now you have some emotional attachment, some skin in the game, and you go out and look at the price patterns of Rivian, and maybe you start looking at supply and demand methodology, or maybe you're going and looking at moving averages or Bollinger Bands or stochastics or some other strategy tactic that you've learned. Great. Try it with one share. You have real skin in the game. To me, that's a much better way to do it. All right, let's go look at your economic calendar. So I'm not going to get roped into another 1 hour show, but I love all the comments and questions. Let's go over here. So next week we've got some decent economic data, but it's not on the 3rd. 3rd is fairly quiet. We have some manufacturing data coming out for the U.S. You can see here we've got manufacturing PMI, ISM manufacturing PMI, construction spending. You have total vehicle sales, which I think you're going to start to see this number decline because if these tariffs do go into effect, the cost of vehicles are going to rise slightly. because a lot of, as we mentioned, are made in Mexico. We get a lot of, and parts from China too. Electronics could be having some issues, although the tariffs are only 10% there versus 25% for Mexico. So that's pretty much it. And then really the only thing on your earnings front is Palantir, PLTR, which is one of the most beautiful charts you're ever going to see. Look at that chart of Palantir. Man, gorgeous. I think we did the, can't remember when I did the AI stock, AI show. It might have been 2023. Oh, been ripping ever since. By the way, just so you know, you have a shooting star formation on Palantir right now as it hit all-time highs. So this might be something to keep an eye on, even though I'm exceptionally bullish on Palantir. You know, if you get a close below that 80-87 mark Monday, I think that might be a good opportunity. So it'll be quiet. It really starts to pick up later in the week. We have some major companies reporting next week. We have Google reporting. We have, who else? Apple, Amazon. Is it Amazon? I think Amazon reports as well. So you got Google and Amazon next week, and should be a pretty exciting time. Yeah, Palantir earnings is on Monday. Yep. Are new unsold cars affected? No. Once they're here in a new unsold car, that's a good question, Sava. I would imagine that the tariffs would be imposed on import, not if they're already here. Great question. I don't know. MicroStrategy's next week as well. Yeah, and I am now going to be, now that my, if you look at MSTR, I didn't want this to happen, but I did get executed on my MicroStrategy. So we closed at 334 today, and I had the 350s and the 352.50 puts. So I'll have 200 shares as of Monday, so not a lot, just a smaller position, but I have 200 shares of those. I actually sold the 352.50 calls against those, collected, was it $10 per? So still decent amount of income coming through for that one. All right, MicroStrategy Wednesday. Yep. And here's the thing: they don't really have earnings. It's just capital gain. It's capital gains, and we'll see what happens with the whole MicroStrategy has to pay capital gains on unrealized gains, which I don't believe that will happen, but you never know. It could. Pretty sure that will stop. And by the way, if you guys have the opportunity, I know you may have seen this, that Sam Bankman-Fried's parents are trying to petition Trump to pardon him. Do you have anything with your senators? Send them a little something saying, absolutely, this guy does not deserve to walk free. Not a chance in hell that kid deserves to go. Yeah, no way. Anyway. Cool. That's going to do it for me, everybody. I'm going to run downstairs and make up for lost time with a glass of whiskey. And I have a really great bottle I wanted to share with you. Like I said, a friend got it. It's made out of rum barrels. So I'm curious what it's going to taste like. So we'll have a little glass of that as soon as we're done. If you guys have questions, comments, things you want to discuss, let me know. Email me, tradermerlin@gmail.com. It's on your screen right now. And I know some of you listen to the podcast. Sorry for yesterday's show. I'll see if I can fix that one tonight. I'm not sure what happened there, but somehow the audio never got loaded up and deport Sam. And honestly, instead of giving him a pardon, you should look at putting his parents in prison because they were a part of that scheme for sure. All right, everybody, that's going to do it for me. Hope you guys have a fantastic weekend. Do something fun. I will see you all on Monday. And again, if you have something you want me to discuss, email me or put it down below any YouTube video. Take care. Have a great weekend.